And hello everyone, Mike Arnold here, co-founder of Path Trading Partners along with Bob Iacino. Quick quiz of the day. Did we have selling pressure above 795 to 800? And yes, we did. We had the key levels identified, 795 and then the upward sloping channel line and still selling pressure up there. And by the way, I saw the question, what was the exact area for if they got above for the double top, potential double top to be invalidated? Well, it was right around 796 and change. I don't remember exactly, but it is invalidated. So for everybody who was worried, because we had a potential double top in place, it's no longer. Does not mean anything that it has to go up from here. It just means that you can't use those targets to the downside. I'm pretty much, even though we don't have the potential double top in place, still this 763.66 area, which would be on, if we get a close below there, which would be also be below the daily rotation zone, would be in a short-term bearish correction for me, as I've talked about many times now. Let's take a look at the intraday price action. We had decent option volume. My voice might get a little faint for a second because I have to call up my options platform on the other computer just to double check the end of day. We roughly had 130,000 of the 800s go off. That's 800 strike price expiring tomorrow, October 7th. So anybody who's new here, that's what we're watching. We're watching the weekly option volume on October 7th. Or on October 8th, that's expiration, and we've been keeping an eye on the 800s, and it got above 800 today, and a major selling pressure. Now, there was also some selling pressure. I'll do some market update. I'm doing the new segment, Mike's Market, I don't even know what I called it, Mike's Market Overview. Boy, it's even named after me, and I don't even know what it's called. So, but, you know, also those eight shifting, we had some 810s go off about 48,000, 820s go off about 37,000. So we had it, but the selling pressure still up there, and I've talked about that repeatedly. That's why it's always good if you're trading intraday, at least know where your trailing stop price is. We didn't really get a move on till this afternoon also. Then this, you know, we had this, these are the bars, kind of bars I like. No overlap, little pause, this is the pausing bar. So when I talk about momentum bars, here's your series of momentum bars. Breaking above your key resistance, and look at those levels. I'm sorry, please learn. If you learn one thing from me, learn the harmonics. I don't know anybody else who teaches a 12 and 25% off these key highs and lows. But they work. They're not magic. They just work. There's something about those 12 and a half increments for any musicians out there, the eighth increments, 789.81. You can see how that just provided a really nice ledge. That was projected from the video yesterday. So if you can learn that, because it's really good for at least using levels to move up stops or taking profits. Finally breaking above there. Next target, that 795, pausing right there. We had that already identified. Then we had the upsides. We had 819 and 803.19 poking above that level. And then crashing down. By the way, divergence, so higher high in price action. This was a warning shot. Did not know it was going to, plummet back to earth. There was plenty of selling, though, in the S&P also. Corresponding to this afternoon. So that's also why, if you're just trading Tesla, fine, but keep an eye on the overall markets, especially the S&P, since Tesla is in the S&P. And it did get overextended. Remember, when stuff pulls away from the rotation zone, there are two kinds of corrections: sideways, letting the rotation zone catch up, or the pullback to the rotation zone. This was definitely a pullback to the rotation zone, the prior key 795 area, and then just selling into the end of the day. But this is why knowing where stops are, or at least, let's say you're an intraday trader, ratcheting up stuff to know how to capture some profits if you're in it for multiple days, then it's knowing that, all right, with the selling pressure above here, I have to keep my stops in place. I have to know where they are, or I'm willing to take some profits off the table and then watch for a pullback, a re-entry, pullback, and then re-add to my position. So again, couldn't get the close above the channel line. Again, we've only got really, if you look at all this from our best fit channel line, we've had one close above it on the 27th of September. Since that time, we've poked above it 1, 2, 3, 4, 5, 6, and not got another close. Now, there is a selling pressure. If the selling pressure does go away, then there'll be some, I'm going to caveat this. If the selling pressure goes away and we have the same kind of option volume, which anything over 100K in a single strike multiple times in a week is very substantial option volume on a weekly basis. So as long as we keep seeing that, and if this selling pressure does go away, there is some upside potential. What is that upside potential? Well, you know, it's still constrained. I mean, my next major, we'll get into more of this tomorrow, but my next major thing to watch is if we get a close above, if you can get a close above 818. 818, mark that off. If you get a close, we're into what we call a clear path move, and I'd be watching for moves up around 868 at that point. But we need a close above 818, and we haven't even been able to really get a close above 800. So the reason I'm putting that out there is if this selling pressure disappears. Now, if the selling pressure remains in place, then again, I'm ready for a bigger pullback, but I need that close below 763.66. Until then, I personally can't just fade a move unless we had that potential double top in place, which was now invalidated. But this is why I don't front run patterns. I don't just try to, I can definitely see why. Again, we have a divergence. We have multiple divergences up here. Each push higher is waning in momentum. But I just can't justify, I'm just going to take a betting on the downside because we have waning momentum. I need some price action confirmation. So trading to the downside, I need price action confirmation. Trading to the upside, I need price action confirmation in the form of a pattern. Sorry, I guess I'm rambling on. Again, I got off the phone with one of the subscribers, and another great guy. I love the subscribers, and thank you for everybody who does subscribe, because I get to meet a lot of interesting people and talk to a lot of interesting people from all different walks of life, from all different professions. And as I said, all I'm trying to do is help people and share some of my market knowledge that I've developed since 1992. All right, that's enough. Let's get to the price action for tomorrow. Key areas, I probably guess it. Key area to the upside, 795, 795.30 area, which was confirmed today. That's my first area I'll be watching to the upside. Next area I would watch is right around the 797.50, right in here. This little ledge, this little key ledge right there. Maybe I'll just mark that off. Right there. Let's go to 797.50 area. That's happened to be right where I put it. And then above there, I'm watching for today's high coming in at 8:05. What was it exactly? 8:05. Above 8:05. Let me bump this over. I'm going to the slightly longer targets for this. Then my next key area is 8:10.18, then 8:15.60 to 8:18. Those are my targets to the upside. To the downside, remember, don't get blinded by one direction. To the downside, 792.27. We have a harmonic right there. We have the 50 period on the 5, which is just a very minor level. But if we start breaking below that, my next key area, nothing on the 15, my next key area, I'll be watching the 1 hour. The 1 hour, about 788.25 to 789. Right in there, that's my first support. Then major support on the 1 hour coming in about 785.50. So we had some prior significance there. That's the bottom of the 1 hour. And let's see, we're closing in on that level with the 4 hour, so we would not ignore that. And then a drop below that, 775.30. Even to the downside, even if it starts selling off, there is not a clear path. That's why it's challenging to the downside if you're looking to be in bearish mode, which is fine because I get that too. We have waning momentum, but there's so many support points in here. There's so many support points over the last few days. That's why I still need it to go. Look at below 763.66. Look, there's a lot. You have it's a 759.24 to 759.90 is a support point, but then below that, you don't have much support until you get down to about the 740 level. And then below that, you have some minor about 730, and then below that, you don't have a lot of support. So that's where I have to let it get through all this key support before I can get into a bearish mode. That's for the bears. Now for the Tesla bulls, you keep watching the option volume, keep trading in the direction of the trend, but keep in mind there is this really strong selling pressure above 800s. If that suddenly disappears and you get those momentum bars followed through, then you're off to the races. But I'm still need that close above 818. Remember, we saw it on the chart. How did I get that level on the chart? That was here. Let me zoom in. I know sometimes my levels are hard to see. That's this key open from a list of dates so you can look at it on your chart. 16th of February from 21. That's the key open I need to get above on a closing basis. But then there's more. Look at our harmonic projection. 818. So we have 818 from the chart. We have 818.01 from the harmonic projection. That's the number you should etch in your brain for if we're going to start another major bull run. We need a closing basis above there. I'll leave it at that. If you're new here, please consider subscribing, dislike a video, leave a comment. Longer term members, leave your comments. Keep supporting the channel. Thanks for all your help. Thanks for everything everyone does, and I'll talk to you later. Bye for now.